Ladies and gentlemen, welcome to Entrepreneurial Finance, negotiating of business ideas. Let's assume you found an angel. He says he wants to put in $100,000 or euros for a valuation of 500, so he wants 20% shares. And you have a totally different idea. You say, at least my company is worth $1 million, and I only want to give you 10%. Now that's the time where you have to negotiate a deal. As already said, and you can look at the valuation chapter, it is not easy to do an evaluation of a startup company. There's all rules of thumbs. So negotiating the deal gets more and more important. The business angel is willing to financially support your business idea, but is he also willing to negotiate with you? Or is he just offering a deal and this is it? Actually, there is angels who say we don't negotiate. They don't want to invest too much time in negotiations. They're concerned about the efficacy of a relationship. The relationship might turn bad if they have bad negotiations. They don't think the price or all the other terms are significant. And they might be right. I mean, if you can sell your company later on for 200 million and you have 10 or 15%, actually, it always makes you a millionaire. So is this really worth negotiating that and risking that this company can't start? This is why some angels say, okay, we don't negotiate. Others do. They quickly offer final terms. In a one-shot offer, let's say, okay, sit down and do that. However, still you run into the risk to piss these people off, and you remember they want to have fun in investing into your company. So that's one of the reasons why they do angel investments. So there's two kinds of business angels, those who don't negotiate, and also those who do negotiate. If you're in a situation that you can negotiate with your business angels, then there's a couple issues you have to resolve. You have to align the interest of the investor on the one hand and the entrepreneur on the other hand. Because the investor is always interested in a low price, high amount of shares, not too high actually for a business angel, but high enough. The entrepreneur is interested in lower valuation and remaining in control and so on. So let's look at these arguments a little closer. If you look at the entrepreneur's interest, first of all, it's the valuation. Ideally, a lower valuation. Secondly, it's control of a company. There are always entrepreneurs who think they have to remain in control in terms of having not only the majority of shares, but also having more than 80-90%. This is a different discussion whether this is necessary or not. However, the one thing we can say is this might be important for entrepreneurs, because entrepreneurs sometimes feel that by giving away shares, they lose control. So that's an issue for them. There's another issue is how do I have to do my reporting, for example. And another issue, and that might be very interesting, what's the potential for follow-up funding? Because that might lead to the point that entrepreneurs might be interested in a high valuation, but also might be interested in not too high valuation. Because if the valuation is too high, there's no room for a nice equity story. And the equity story is basically the value of the company over time. Is the value of the company rising over time? If you did good negotiations at the very beginning and you have a 10 million valuation, for example, and then you have to look for a new investor, and the new investor is also only doing a 10 million valuation, you do not have an equity story. You need that equity story in order to be able to bring your company public, to sell your company for an interesting exit and so on. So the potential follow-up funding might be also an issue which you have to discuss. Timing, then more terms to the deal, which is contractual details, seriousness of the investor, and all these issues. So this is what the entrepreneurs is probably bringing into that negotiations. And the investor has contractual details too. He always has the question of valuation, and it might go in line with the potential follow-up funding. But there's also more issues. Additional warrants. Does the entrepreneur do that full time? Is the entrepreneur good enough? And the management team good enough? And so on. So these are issues which the investor brings into the negotiations. And it is important to find a line between these two parties, between these arguments you can see on that slide. That basically leads to the initial question, should you negotiate the deal or not? Well, if you're able to negotiate the deal, there's advantages to negotiating deals, which is you have the potential of a higher valuation. You might not have the biggest potential for follow-up funding. This is what you have to level to some extent. Higher level of control, at least perceived control. You might get better advice and so on. So having a chance to negotiate a deal might be positive, but also not negotiating might be also connected with disadvantages, because then you do not have the chance to put the investor and you in line in this company. You don't use the potential which you have to have a good valuation and so on. So in summary, it makes sense to negotiate. Also, there are some angels who don't want to negotiate. However, we shouldn't overestimate negotiations, because at the very end, if you take uncertainty serious at the very beginning, nobody knows whether this company could be sold for 200 million. And then having a 200 million deal and having some percentages is always sweet. So those negotiations at the very beginning do not play the biggest role for that.